I don't think the Bitcoin high is in place. But you're right, we were too optimistic about this happening by December, but I do think Bitcoin can make an all-time high by the end of January. So I don't think we should think the highs are in place for Bitcoin or Ethereum or crypto. So a lot of it's going to depend on equities recovering, which we expect it to, and that helps the animal spirits, and I think a new Fed chair will help. And we have, as Becky said, when people got worried about a hawkish Fed, that kind of hurts the discount models, the discounted cash flow models like AI models, but it hurts crypto models too. So if we have a dovish Fed, that's really a tailwind.
December didn't open the way many bulls hoped. Markets slipped and volatility crept back in. But Tom Lee immediately frames this weakness as short-term noise, not a trend reversal. 2 weeks prior, he warned that markets could see near-term turbulence even if year-end would be strong. And that is exactly what's playing out. The core of his optimism lies in liquidity, specifically the end of quantitative tightening, QT, which officially concludes now. The Federal Reserve has been shrinking its balance sheet aggressively since April 2022, pulling liquidity out of the system and creating a major headwind for risk assets.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
This is not a portentous start for December, given what you were thinking. Although I remember last time you were on, Tom, you said good year-end action, but rocky in the near term. That was about 2 weeks ago, and we've certainly seen that. But you still bullish on crypto and stocks going into year-end?
I am. I think the biggest tailwind that's going to emerge in the next couple of weeks is around the central bank. The Fed is set to cut in December, but also today is the day that quantitative tightening ends. And as you know, the Fed's been shrinking its balance sheet since April 2022. It's been a pretty big headwind for market liquidity. The last time we had an end to QT, quantitative tightening, was September 2019. And if you look back at that period, the markets really responded well. I think within 3 weeks rallied more than 17%. So I do think the timing of QT ending, which is now essentially QE starting, and the Fed, and at a time when November kind of was topsy-turvy, so I think people got cautious, but now have to performance chase, and then you have a really typically a seasonal tailwind. So I'm pretty bullish into December, even with maybe the first day being rocky.
Yep. So it's still all about the Fed for you, because I was thinking there is a time when a market can hit an inflection point where the reason the Fed is cutting becomes a problem for the markets. That's what I thought. With the jobs and everything else, there might come a time where purely Fed cuts, or the backdrop is that there is some weakness in the market, in the economy. You don't see that?
I mean, I'd say that the shutdown put a blackout on data, and I think that created a bit of anxiety because, markets like visibility. But to me, the fact that claims have been behaving and the September jobs report kind of showed a bit of a recovery. I think the labor market's probably holding fine, but the Fed doesn't want that to worsen. But I think the inflation story is actually weakened a lot. So to me, the Fed would be cutting for the right reasons, which is, as they look at the next 12 months, the tariff inflation impacts are fading, but there's risk on the job market. So, I mean, I think it's cutting for the right reason, which is, real rates are tightening if they don't cut.
Here's what concerned me about a couple of weeks ago, Tom, with the market's behavior, and that was watching all of the AI high flyers dip and drop, and pretty precipitously in some cases, because it looked like the Fed wasn't going to cut. That raised questions about what was happening in the private markets, and it made me start to wonder, okay, are we looking at a lot of business models that don't work if the Fed doesn't continue to cut rates? Are these the business models that are driving and powering the market right now? That's the one thing that made me sit up and say, that's a little different.
Yeah, I think there was a bit of soul searching, Becky, in November, because we know leverage rose, and we know there was deleveraging in some markets like crypto, and we know margin debt's high. And I think that there was essentially a reset in November because the market had a 6% decline, but the AI stocks and the meme names and a lot of other names fell even more. So I think that position reset has been healthy, and I think many fund managers we talked to in November, in the midst of all that, kind of threw in the towel, thought the rest of the year was sort of a write-off, and now if December is strong, there's going to be a bit of performance chasing, and I think that's what you should typically expect in the final weeks of the year.
I thought it was when we saw Bitcoin sell off and sort of the high flyers sell off on the notion that Powell got hawkish at that one, whatever it was, that one meeting. And then Williams totally turned that around. And the Fed futures jumped, and it became clear they're definitely cutting again. And we got very little for that. Bitcoin should be back at 100 if it really is totally dependent on Fed easing. And if it's a debasement trade, which people say it is, we didn't get much. For now, everybody, you're sure that they're going to cut now. There was a time where we thought they weren't going to cut. What do we get for going back to cutting mode?
Yeah, I mean, Bitcoin and crypto have been disappointing because they really took it in the gut in mid-October and then kind of got hit again when, you're right, when the odds of a Fed cut dropped, Bitcoin fell. And then now that the odds have recovered of a cut, they haven't quite recovered. I mean, I think that's still the lingering effects of that deleveraging that happened on October 10th. It's not that different than the wipeout that happened in 2022 with FTX. That took 8 weeks, so we're kind of emerging from that. That's 7 weeks in the rearview mirror, so maybe in another week or two, I think crypto has fully washed out, and that's when it starts to participate.
Yeah, wipeout's a bad word. If you could pick another one next time, Tom,
yeah.
we don't. You had very aggressive targets for the S&P and Bitcoin by the end of the year. I mean, it'd be crazy to hit the Bitcoin target, for example. I don't know what that was. But 7,000 on the S&P is still something you think that can happen this year?
Yeah, I mean, 7,000 is only 2% for S&P. From here, I think 5% or maybe even 10% is possible in December. So I think a 7,200, 7,300 is likely for S&P.
Ask you not to do that. You're giving me a target and a time. Don't. It's not good for your career. Don't do that. You're going to be wrong one of these times. But you don't care, do you? You've been right enough.
Well, I'm just looking at probabilities. But you're right. We've been wrong plenty of times, Joe. So I'm okay being wrong too.
Okay. I never have been, really. I don't think so. That would be a big shocker. It does. It happens to all of us. How about Bitcoin? Would you think you'd be happy with 100 if it got back by the end of December, wouldn't you?
Yeah. In fact, I think it was looking good, like you said, over the weekend, and then we got a decline. Sorry. Maybe because the Bank of Japan looks hawkish.
Yeah.
But I don't think the 4-year cycle. I don't think the Bitcoin high is in place. But you're right. We were too optimistic about this happening by December. But I do think Bitcoin can make an all-time high by the end of January. So I don't think we should think the highs are in place for Bitcoin or Ethereum or crypto. So a lot of it's going to depend on equities recovering, which we expect it to, and that helps the animal spirits. And I think a new Fed chair will help. And we have, as Becky said, when people got worried about a hawkish Fed, that kind of hurts the discount models, the discounted cash flow models like AI models, but it hurts crypto models too. So if we have a dovish Fed, that's really a tailwind.
Tom, is there a point, though, Joe and I were talking about this in the last block, is there a point where a Fed that's too dovish scares the markets because they're worried about inflation?
Yes. The markets don't want the Fed to lose credibility. And the bond market will kind of protest if the Fed is too dovish. But I think when I look at Fed fund futures, especially implied inflation, the bond market's more dovish than the Fed. So it looks like the Fed is behind, and that's why I think cuts are necessary.
A more contrarian long-term point arises. Some analysts argue that Bitcoin may be front-running a larger macro shift toward a 2026 bear market, similar to prior halving cycles. The argument is 2024 is bullish, 2025 euphoric, 2026 corrective. If Bitcoin continues to drift lower into year-end, it could mirror 2021's triple red month structure, setting the stage for a counter-trend rally early next year. Tom Lee doesn't directly endorse this scenario, but it aligns with his broader view. Crypto can rally soon, but liquidity must truly expand for a sustained move.
So Bitcoin right now is coming in at around $87,000. Now, a lot of people are perplexed, right? They're like, well, quantitative tightening is coming to an end on December 1st. Why are we seeing Bitcoin drop into that? Well, first of all, you should know that actually the exact same thing happened back last cycle when QT ended. The other thing that people should remember is that the announcement date that QT ends is not actually necessarily the same date that the balance sheet of the Fed starts going up. Now, that might seem confusing. You might say, well, if you look at 2019, you can see the balance sheet of the Fed started to go up in September. Now, you might be led to believe that because the balance sheet of the Fed went up in September, you might be led to believe that because of that, you might think, oh, well, that means QT ended then. But in reality, if you dig into the mechanics, the Fed announced the end of quantitative tightening. They announced it on July 31st, 2019, and said on August 1st, QT comes to an end. So they announced it on July 30th. So let's look at what Bitcoin did on July 30th. Right here. You can see Bitcoin dumped into the announcement. It then rallied, but then Bitcoin continued to not really go anywhere, even though the balance sheet eventually started to go up. Bitcoin continued to bleed, even though the balance sheet was going up. This is what I've tried to communicate to people for years, right? For years, that just because you have the transition from QT to QE doesn't necessarily mean anything. What did mean something was when you had a panic and then the balance sheet really started to explode, right? That is where things changed. So right now, we're not even in the phase where the balance sheet goes up. There's a good chance going into December that the same thing that happened in 2019 is going to happen again. Where essentially, back then in August 2019, it took until, mid-August for that last batch of Treasury maturities to settle. And maybe the same thing's going to happen again now, right? Like, it seems like a likely scenario where it could take a few weeks. You could argue that we might not even notice the balance sheet starting to go up until 2026. But by then, it might be more obvious to people that we're in a bear market, Now, that doesn't mean that nothing can put in new all-time highs. Obviously, some cryptocurrencies are putting in new all-time highs. But the hard part with Bitcoin right now is that, it's been dropping throughout the last couple of months. And we know that while it might drop back down and then get a nice rally back up, there is still a decent chance that until the Fed really starts to increase the balance sheet more, and when they really start to drop those interest rates more, it might not have the desired effect, right? Like, it doesn't mean you're not going to have counter trend rallies. But the reality is that what I'm saying, I think, is the most likely scenario right now, is I'm saying that this 2019 bear market that happened as quantitative tightening ended and QE began, and as interest rates came down, that, I think, is what's happening right now, right? Like, I think that same thing is happening right now. And so you're going to have some rallies by Bitcoin, absolutely. And I've said many times, like, you will likely have a rally back up to the 200-day moving average. I think that will happen. But that doesn't mean it has to happen today, right? Like, it could still be a few weeks away. Who knows exactly when it's going to happen. I could see a scenario where this bleed continues for a little bit longer, and then you have 3 months in a row potentially that are red. I mean, I hope December is green. In all honesty, I hope December is green. I mean, it would be nice to have some relief here, but there does exist a scenario where you have these monthly returns, kind of like 2021, where you had 3 red months in a row, November, December, and January, and then February and March were green. What if we're front running that and October, November, December are red in preparation for the 2026 bear market? But you could argue that this initial drop already potentially gets you halfway through the bear market. And usually what happens halfway through the bear market is you get a counter trend rally, just like Bitcoin got in February and March of 2022. So maybe that's what happens, right? Like maybe Bitcoin just continues to not go up and maybe either goes sideways or down for the rest of the year. A lot of people pricing in the 2026 bear market. And then potentially in early 2026, you get that counter trend rally and people are like, oh, what if 2025 was the bear market year? Like what if that's the red year and 2026 can be green? Now, unfortunately, I think 2026 will be red, but there might be a brief period where people think it will end up being green.
Tom Lee's analysis paints a complex but ultimately optimistic picture. The start of December may look shaky, but the deeper forces, ending QT, upcoming rate cuts, seasonal strength, and a positioning reset, are powerful tailwinds for both stocks and crypto. Bitcoin is lagging not because the macro case is broken, but because deleveraging takes time. Meanwhile, the S&P 500 appears poised for potential upside into year-end, driven by liquidity inflections and performance chasing among fund managers. The key message? Stay focused on liquidity, not headlines. Cycles repeat, patterns rhyme. And this transition from QT to QE has historically unlocked major rallies across risk assets.